Hi, this is The King, and you're watching Elite Finance King. Welcome to the Pride. Let's get into it. Today, let's tackle a topic that can be a bit daunting for beginners, the stock market. Wealth builders, have you ever felt overwhelmed by the idea of investing in stocks? To be honest, you're not alone. Many people dive into investing without understanding the basics, and take note, it can lead to costly mistakes. But fear not, I'm here to guide you on your journey to financial success. Remember? So, without further ado, come join your king and let's get started. Alright, wealth builders, let's start at the beginning. What is the stock market, you ask? Well, the stock market is like a vast marketplace where you can buy and sell pieces of companies. Let's use the example of investing in technology companies. Imagine you're purchasing shares in a leading tech giant. As the company innovates, releases new products, or secures lucrative deals, the value of your shares may rise. On the other hand, if the company faces challenges or fails to meet market expectations, the value may decline. Pretty understandable, right? Wealth builders, the stock market basically serves as a platform where investors can participate in the growth and success of various industries. It allows individuals to become partial owners of companies and potentially reap the benefits of their growth and profitability. However, investing in the stock market also carries risks, as share prices can be influenced by factors such as economic conditions, market trends, industry competition, and even geopolitical events. Even I, your king, am not safe from these setbacks. Therefore, it's essential for you, future and aspiring investors, to research, analyze, and have a sound understanding of the companies and industries in which they invest in order to make informed and strategic decisions. Now, wealth builders, let's talk about how you can make money in the stock market. Your king has prepared two ways: capital gains and dividends. The first way to earn and participate in the stock market is by seeking capital gains. Essentially, this involves purchasing stocks at a specific price with the hope that their value will appreciate over time, allowing you to sell them at a higher price and pocket the difference as a profit. For instance, if you acquire a share for $50 and over time it increases in value to $80, you have successfully generated a $30 profit per share. It's like buying a rare collectible and selling it when its value goes up. Wealth builders, capital gains are often realized over the long term, and I'll tell you this: patience is key to weathering the market's fluctuations and benefiting from potential gains. Another avenue for novice investors to explore in the stock market is through dividend investing. This approach offers a more immediate and predictable source of income compared to relying solely on capital gains. Some companies choose to distribute a portion of their profits to their shareholders in the form of dividends. As a shareholder in these dividend-paying companies, you receive a share of their earnings at regular intervals, often quarterly. Wealth builders, as your king, I can say that this is absolutely great because it is like getting a tasty dividend pie slice every quarter, just for being a shareholder. These payments can be a valuable source of income, particularly for those looking to create a steady stream of cash flow from their investments. Now, wealth builders, another question that might be running through your mind as a beginner is, how should I choose which stocks to invest in? Well, as Warren Buffett advises, he advises investors or even those aspiring ones with these two strategies. First, use index funds to invest in the market rather than trying to pick individual stocks. And secondly, approach your investments with a long-term mindset. Let's discuss the first one. For beginners looking to dip their toes into the stock market, index funds present an excellent and relatively low-risk option. Your king wants you to think of index funds as a curated basket of various stocks, bonds, or other assets that mimic the performance of a particular market index, such as the S&P 500. Investing in index funds offers instant diversification, spreading your investment across multiple companies and industries, which can help mitigate the impact of poorly performing individual stocks. This diversification is particularly advantageous for newcomers as it reduces the overall risk associated with investing in the stock market. Wealth builders, index funds are also considered a safer entry point because they tend to be less unstable compared to individual stocks. The performance of an index fund is directly linked to the performance of the underlying index, which often represents a broad cross-section of the market. Your king is trying to say that essentially, you're betting on the overall growth of the market rather than the fortunes of a single company. Now, after index funds, beginners who are venturing into the stock market must adopt a long-term perspective. Why? Because it is a foundational principle that can significantly influence your investment success. Your king advises you to consider investments as a long-term commitment to building wealth and achieving financial goals, rather than viewing them as short-term gambles. I know, wealth builders, when you're young and new to this industry, the allure of quick profits might be really tempting. However, seasoned investors understand that the real power of investing lies in the compounding effect over time. Through patient perseverance and maintaining your investments during market ups and downs, you provide your money with the opportunity to experience substantial growth. Another, your king wants you to avoid the urge to engage in frequent buying and selling, a strategy often referred to as day trading or market timing. While these tactics can occasionally yield profits, they also carry high risks and substantial transaction costs. Instead, focus on a buy and hold approach, where you invest in fundamentally strong assets and resist the temptation to react to short-term market fluctuations. This not only reduces trading expenses, wealth builders, but also aligns your investments with your long-term financial objectives. In essence, patience in the stock market can pay off handsomely as you allow your investments the time they need to appreciate and compound, ultimately leading you to more significant gains over the years. In simpler terms, index funds are like a mixed bag of stocks, while long-term investing is like planting a financial seed and watching it grow into a sturdy tree. Keep this concept in mind, wealth builders. But before we proceed, wealth builders, here is a question for you. What is the primary reason driving your desire to invest in the stock market? Feel free to share your thoughts in the comments below. Your king eagerly awaits your insights. Now, let's get back to the video. At this point, let me ask you, are you ready to invest in the stock market now? I assume the answer is yes, since you are still here with your king. However, I can sense that you are still worried because you believe that starting to invest in the stock market is difficult. Well, it can be challenging without a guide. But getting started in the world of stock market investing is easier than you might think, wealth builders. There is a lot of information that needs to be discussed, which is why we will break it down step by step in a separate video. So, make sure to stay tuned, wealth builders, and allow your king to guide you on your journey to financial success in the stock market. There you have it, my loyal wealth builders. If you found this video valuable, please like, subscribe, and share it with your fellow financial dreamers. Your king here appreciates that. Until next time, and always remember, Pride members, life is short and it's too easy to be average. Make a change today.